So now, we are now using moving average. Okay, trend strategies. So this one is the EMA ribbon. We are using EMA ribbon, moving average. Okay, so how do we use? This is all in my chart. This is the EMA ribbon. These many lines here. Okay, that is moving EMA ribbon. It's a ribbon. Okay? So let's check. So moving average ribbon or EMA ribbon. So parallel moving average indicates a strong trend. Okay? So if it's parallel, meaning it's the same, they are not crossing each other, it shows a strong trend. Okay? Meaning it's is strong going down if it's a downtrend. Okay? So if you see your ribbon all lining up, it indicates a strong trend that it will continue to go down. And ribbon expansion indicates potential end of the trend. So there's a ribbon expansion. There's a big space here. It expanded. So it indicates the end of the trend. Okay? So now what happens? Ribbon contraction indicates the possible start of new trend. Now there's a contraction. Okay? So they're crossing one another. So it consolidates and then now new trend. That's how good this EMA ribbon. You can use it for your daily trade. Okay? So EMA ribbon. What is EMA ribbon? So this is support, 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 support. So okay, that's a line of support there. Okay? So it's a strong trend of going up because the ribbon are in line with each other in proper spaces. Okay? And now we see here a big here expansion, ribbon expansion. We see here a ribbon expansion. There's a big expansion here. So it's a sign of change of trend. So now it went consolidated. So it consolidated. Okay? It changed pattern. The same as EMA ribbon. Okay? So that's how you use EMA ribbon. Okay? So now, how are you going to use this 20 MA, 50 MA, and 200 MA? So now we're going to moving average. So 20 MA is a 20 days. It means 20 candles. It means 20 candles moving average. So you get the 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 20. And then the moving average of the line will find the moving average and then it goes there. Okay, that's the meaning of 20 MA, 50 MA, 200 MA. Okay, let me explain to you this three. So when I was still starting, I was only using this strategy. Okay? Because this is the simplest strategy. So 20 MA is for the volatile market. If the market is volatile and fast moving, the candle will respect the 20 moving average. You see? Respect, respect, respect. Oops, it did not respect it. It touched the 50 moving average, but it bounces back again to the 20 moving average. So this is for fast market, the 20 moving average. It respects the moving average. Okay? But if it starting to disrespect, it goes to 50 moving average. What is the 50 moving average? This one is for the normal market. Okay? If the 20 moving average is for the fast market, volatile market, 50 moving average is for regular market, normal market. Okay? No pump, no volatility, just normal. Okay? That's 50 moving average. And the 200 moving average is the slow market. Okay? If the candle respects the 200 moving average, it means it's a slow market because it's already crossing the 200 moving average. Okay? Okay. So, how to make a signal here? When there's a crossover between 20 moving average and 50 moving average, the S there is simple. Okay, simple moving average. So, the 20 moving average crossover. So, once the 20, the yellow line, crosses the 50, blue line, 50 moving average, it's a sign of new trend. It's going down. Okay? Once it touched the 200 moving average and it bounces back, it respected the 200 moving average, it will continue. And then the 20 moving average crosses again the 50. It's a sign it's going up again. Okay? So you'll just look at every sign where it crosses, where it touches. Okay? So once it crosses, that is for the moving average strategy. Okay? So when it's downtrend, moving average are aligned. Okay? And during consolidation, they cross each other. Okay? That is moving average. The most important indicator is here, 10, 20, 50, 200. What I use is 250 and 20, 50, and 200. That's I use. Okay? So here's another example of moving average. Okay, so now we're going to the Ichimoku candle. Okay, so Ichimoku is a good signal also. Okay, so let's get to know Ichimoku first. Let's get to know their names first. So actually, Ichimoku for basic is, this one is the first line of support, the blue. We call it Tenken-sen. The blue line is the first line of support. The red line, which is we call it Kijun-sen, is the second support. The third line, green, this is the cloud already. We call it Senku-A. So the cloud, Senku-A, is another support. And then the last line of support is the cloud below line is the Senku-B. Okay? So in basic, you can only see that this is all support. Okay? Strong support, the lowest support, which is this one, the Senko-B. The, the, the weakest support is the Tenken-sen. Second support, the Kijun-sen. Next, the Senku-A, and then the Senku-B. Okay? So, using Ichimoku strategy will make you a profitable trader also. Because it shows you how this cloud, you see when Japanese makes a indicator, it's really working. So, this is another one. So, look. Okay, so I just introduce you. And now, how do we use it? When there's a crossover with the cloud from green to red, then it's a sign that it's going down. When there's a red to green, red cloud to green cloud, it's a sign it's going up. Okay, so once it crosses the cloud, then it's going up. Once it crosses the cloud, there is no support anymore, so it's going down. Okay, so the strong support, the last support, they cannot break the support, the Senku B, then it went down. Okay, so if you cannot break the support, you cannot break it out. So once you break out the support, then it went up. Okay, but it tested it twice. First test, second test, and then it went up. and then tested the support, and then went up. Okay? So, let's look at the chart using the Ichimoku cloud. Let's check the 1-day time frame. Look at this one for Bitcoin. This is the cloud. This is September 23. So the candle touched this one and then bounce with the strong resistance of the ribbon and then went back, and then with this strong support of the Ichimoku, it went so high. The last bounce then went high. Now it's repeating. The cloud is getting bigger, meaning the support is getting stronger, and here it's getting bigger. So it touched and then it bounced. Now it touched the ribbon and then it bounced again going down. It might touch the same place here. Okay? This place here and this place here will be touched. Okay, this is current BTC, okay? This is today, November 30, 2021. It might touch here again to retest, and then if it holds, okay, if it holds, it will bounce another bounce. Okay? So what bounce are we expecting? Let's pull up the ruler. So last time it touched, it moved 62%. Okay, 62% bounce. So if you place here a 62% bounce, 62% bounce, let's check a 62% bounce from here. Here, it's 86,000. Okay? So this is really a bullish sign. So if this Ichimoku cloud is respected, then bounces, and then cross this 82, this 82 candle, this 82 cloud, 62,000. If it crosses here 62, then it will fly. Okay? It will fly to 86,000. Just like this one, it was not able to cross the cloud. It became a strong resistance, so it went down. It tests again, it went down. Now it tests the ribbon, it went down. So if it cannot break the ribbon, the cloud, then will be open place. Okay? So that's how you use the Ichimoku cloud. Look at this one. This bull run here. Okay? So the bull run, crossover, and then bounces. Too much bounce, too much bounce, too much bounce. Once it touched the cloud, it bounce again. Bounce again. Bounce again. So it crossed, then it went down. Went down. So the strong support, this is a strong support in 40,000. So once it touched, it bounced back again. Okay, this is tested for so many times. 1, 2, 3, 4, 5, 6, 7. 7 times it was tested and it is so strong. This is the power of Ichimoku cloud. So it's a signal, then it went up. That's how it works, the Ichimoku cloud. Okay? So let's continue. So every time it touches the strongest support, it bounces. First support, it bounces. First support, it bounces. Once it breaks, then it went down. Once it breaks, it cannot push through the resistance, it went down. Once it touched, it went down. Once it touched, it went down. It went down. Okay? So that's Ichimoku cloud for you. Okay? So Tenkan Sen, blue, crossover, the Kijun Sen, brown, and price crosses Kijun Sen and the cloud, strong bullish sign. So if you see the blue line, it crosses the red line, and then crosses Kijun Sen, the cloud, this cloud, it's a strong bullish sign. Let's look at our chart here. Here is the blue line. It crosses the red line. Here, it crosses the red line here. So once it crosses, it's a sign of bullish sign. And then it crosses the cloud. So it went up. Okay? Imagine that crossover of the blue to the red and then to the cloud. Imagine that one. Okay? To 45% profit. Okay? So that's how Ichimoku works. So I use this stuff in trading. I use Ichimoku, I use Awesome Oscillator, I use the candlestick pattern, I use the RSI, I use the EMA ribbon. Okay? So that's the trend strategy. Okay? So once you see the cloud, once it breaks, it's a sign of bullish. Once it crosses, it's a sign of downward trend. Okay? That's the basic of Ichimoku cloud. Okay, so that's all. So now, see you in the next lesson for chart patterns. All the best.